I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market succumbed to selling late this week as investors seemed to suddenly open their eyes to reality. The week started off very strongly again as the EU agreed to a rescue package, and 2 of the 139 different vaccine efforts around the world showed great promise. But strong gains Monday and Tuesday morning turned into really sloppy action after that, as the COVID-19 cases soared to new records, along with, sadly, record deaths. China was told to close their Houston consulate, and tensions have now gotten much higher between the U.S. and China, and there's going to be a tit for tat, or maybe something much worse, as Pompano is out there making a very tough case. Then, late in the week, hugely overpriced tech stocks began to falter. And good earnings were just seemingly not good enough, as we saw stocks like Tesla just blow it out of the park. Great earnings, great deliveries, all of that, and the stock went up and then reversed. We also saw earnings that were good out of Intel, but the stock crashed essentially on news of a chip delay. That did help AMD, which rallied on that news, but that move in Intel is significant. I've got more to tell you about that coming up. Also bringing disappointment was an uptick in the new claims of unemployment. It was 1.4 million reported versus 1.3 million expected. 1.3 million, they might have celebrated that, but how do you really celebrate what is an amount of new unemployment claims that is double any record that we had before? And there is certainly no reason for any celebration when you have 30 million people plus unemployed here in the United States. There's a battle right now going on the bailout program that probably will get solved pretty quickly because the present one is going to expire here at the end of July. And I think it's pretty outrageous that the world has printed $15 trillion plus in bailout money, and here they are arguing about $100 billion here or there. It's pretty crazy as members of Congress try to make themselves look relevant. I'm not making a case plus or for or against the bailout programs. Well, maybe I will, because I think that they're done in a very crazy way, bailing out companies that should not get bailout, and arguing about helping people. Well, something is very backwards in this world. Well, the massive government intrusion we've had is creating overwhelming debt, and in my opinion, just delaying the purge that is coming in the economies and in the markets. That probably is coming over the next couple years, and we'll talk about that as we give long-term perspectives over the coming months. But the economy is permanently changed. There's many things that were normal, the many ways that we did business normally before, well, they're gone. And with businesses learning that they can do things far more remotely using Zoom or WebEx or some other programs and not having to pay for airfares to have people travel around, well, this devastation to the airline business, it is certainly likely to continue for a long period of time. And this massive economic chasm that the Fed and the governments have created over the last 2 decades, well, it's going to cause massive disruptions here in the world, as they can never repay that debt or never unwind that balance sheet. And gold and silver are moving in a way that is expressing those investors' thoughts about the reality. and gold and silver perfectly following our analysis. And thank you to all of the people who have sent us the great emails about their success trading gold and silver based on our analysis. Our stock market analysis has showed a market peak around this time, and then a decline of some severity into August. We think that we're making a bullish case when we talk about a pullback of some 9 to 12%. It could be worse. And we believe that that decline, even though it's barely perceptible at the moment, has just begun. In a few minutes, I'm going to show you the indications of breakdowns in the very, very significant market leaders of the past few months. Of course, those are tech stocks. For first-time viewers and free members to our sites or on YouTube, don't speed forward in a couple of minutes, because I'm going to really show you a great offer that is going to advance your skills as a trader or investor and really raise your odds of success as you engage in the markets. For the week, the stock market, S&P 500, was up, but had ended up here at midday, with just maybe an hour and a half to go, with small losses for the week. The Russell, the Dow, they're around unchanged. The Russell's been stronger, as it has been the Dow, as investors look to value. The NASDAQ also had a pretty good reversal 2 weeks ago, tried to rally and couldn't do it, and that's down over 1% on the week. Bond market, 30 years gain about 1.25 points as that safety bid comes in, and the 10-year yields fall about 4 basis points to 58 basis points, and I believe they're going to go down and test that 40 basis point level in the next month or two. Gold, silver, well, that was explosive. Gold gains about $87 on the week, made a high to about 1906. We have believed it was going to record levels, and we still believe so. And the silver market just absolutely explosive, up over $3, a massive gain of 15-16% on the upside. As talk about changing a tune, the silver market now making huge gains on that silver-gold ratio, and that was expected. The dollar down 5 days in a row, 2.5% down. That is huge for the dollar decline, and that is a result of a Federal Reserve destruction. And compare that to the inversely correlated EU, the euro, which is responding to the EU bailout, as even Germany has succumbed as they are willing to create this rescue package and create bonds to help the much worse off countries in the south. Oil ends up with a very, very slim gain here on the week as it is stuck in a trap, and a big trap. For those of you that are new to askSlim, there's certain things that I would like you to do right now. Please go to the askSlim site and explore it. Look around. We have updated our front page. You'll see some changes in there. If you're watching on YouTube, subscribe to this channel. Click that notification bell. You find out when we put up videos, which we do a number of times every week, certainly extremely educational. Put your thumbs up on there, like this video if you like it, and if you go to Twitter, you can follow us at askSlim. Write to Matt at askSlim.com for membership information, and on that new front page, you'll be able to see a way that you could click on there and ask for a walkthrough of our content, which we will provide for you, and you will be blown away by the depth of what we present. So that's it for the opening, and I've got some absolutely great stuff to bring you right now. I'm going to tell you about the stock market trouble that is right ahead and the breakdown in the market leaders. But before I do that, this is what I told you not to speed ahead on, because this is a value that you want to take advantage of right now. We are bringing back our special trial for level 3. This is a tremendous value that I'm going to show you. In-depth tools and analysis for active day traders, swing traders, and option traders. And there's plenty in there for investors also. It all starts with the Slimulator ranking system, which is an amazing app that you'll look at that is updated daily. What we look at is the 84 best traded symbols in the Slimulator ranking system. We look at stock indexes, stocks, ETFs, and futures. and you will see the breadth of the information that we bring you in widely held. That is momentum analysis, where we do that in multiple time frames, the total sum of the evidence, which gives you a directional bias, and it's for a 3 to 6 week outlook, so it's right in the sweet spot for option traders and swing traders. And coming this Sunday is our new scanner, and you'll be able to see changes in momentum and to our rankings just by using that scanner, and you'll be able to get up-to-date changes. Plus, for level 3, you get our trade ideas. This is 1 to 3 a day that we put up there. RV is our lead analyst, and he's the one that is the lead on that. And he brings you the sum of the evidence analysis on just a multitude of different trade ideas that we bring to you. It's from our huge universe of widely held stocks. We look at over 300 stocks of high caps and mid caps, and then we even go well out of that based on our level 4 member requests. So we look at ETFs and futures. Many trade ideas include a video walkthrough prepared by RV that is just for your learning. It's for teaching you how we come to this great analysis, which has a really, really strong record. And we show you favorable entries, ranges, the target zones, what levels would change it, what is the reevaluation level. And now, coming up on Sunday also, as we bring in these new upgrades, real-time notifications. These are browser notifications that all you'll do is when there's a bell that will show up on the Trade Ideas page, you just click it, you can sign up, and we're going to just send you information as the price nears important levels, and of course as we put up these new trade ideas. As it gets close to an entry range or a target zone or a reevaluation level, we want you to have that information very, very quickly. So we're going to add these new real-time notifications, just absolutely fantastic. And it's not only the information from level 3 you get in this special that we're going to run, this trial, which you can have for 1 or 3 months. What we're going to do is also bring you everything that's in level 2 and level 1. This is the Stock Index Report live stream. This you get every day. You don't need a special platform, and you get the link to, for our live feed. This is actually today's that was posted. I just made a picture of it and put it up here for you to see. What we give you is our just fantastic support and resistance levels, and our acceleration zones, and the high probability of getting down through acceleration zones. You can see here, hits support, comes up, hits resistance, backs off. It actually fell quite hard after that. And you can see the reversal scout as this turns down over here on yesterday and continues down. The same thing right over here. And you'll be able to use it for pair trading. As you can see that what happened in here was that the NASDAQ, which was the weakest, now is curling up, and the Russell is starting to not be able to rebound, so you can see very clearly for pair trades. You want to know which one to buy, which one to sell, or which pair trade to put on, longs and shorts. Well, this is the kind of information you need. So this comes with our level 2 memberships. Included in our special trial for level 3 includes all this level 1 and 2 content. Our stock index report live stream, no special platform. We'll send you that every single morning. It's fresh every morning before the market opens. In the afternoon, you'll get our stock index report, the SIR, which is daily short-term analysis on the indexes, all 3 of the major indexes that we look at, with very amazing information where you'll see our momentum analysis, comparisons between the indexes, and much more. Our weekly stock index report, in-depth analysis, huge amount of info that's in there. Our weekly ETF review as we look at the Spider ETF key sectors that we look at in there with great analysis also. And our special that we have now in level 1, it won't be in there forever, where you use our Slimulator Momentum Tracker for investors. It gives you 3-month plus analysis, some of the evidence and biases in the individual stocks that you may be interested in for investment purposes. This is an amazing app also, and of course our library, 500 plus videos in 9 categories. I bring you my 46 years experience as a trader in the markets. We look at, this includes of course our most popular Future Speak on Wednesdays, where we do that in-depth analysis on 24 different futures. It includes the archive for this show. It has tools for techs with over 80 different videos in there to teach you about technical analysis. It has trader psychology with great videos in there about maybe personal issues and more and more and more. So much in that video library, and that's all included. Special trial, 1 month, all of that. Trade ideas, our rankings platform, all of this that you see in here, all for $49.50 for a month. And there's a 3-month special available also, so you can save more. You want that special trial link? You can write Matt at askSlim.com. That's M-A-T-T at askSlim.com. Matt will send you that special link. You'll be able to sign up, and you'll be able to get this great information. You'll see what's included as you look into the site. There's new enhancements coming, as you can see, and you will be just amazed by how much learning that you can do. Write to Matt at askSlim.com for that special link. Thanks for listening this far, and now we're going to get into this important segment right here where I talk about stock market trouble, market leader breakdowns that are happening right now. So when I say the market's in trouble, I'm saying that for several reasons. First of all, the patterns that I look at that call for a peak in July and a decline into August, well, that timing is coming due right now. And so what I look for indicators that might be true, and we've seen some reversals going on in the key leader tech stocks. I've said in the past that, if it's a rotation, then the market really will not suffer that much. But with the major holdings in these tech stocks being so large, there's a pretty good chance that the market could not withstand a decline in this group. And even if there was some rotation going on, all indexes would likely fall. And that's what I think is starting right now as I see this. And I'll show you more about that when we get into the short-term view. But what I want you to see are these 6 very key stocks that I think are breaking down, these tech leaders. The top 8 stocks in the tech index are, in the NASDAQ, weigh 50% of the index. I'm going to show you 6 of those right now. So let's look at Facebook. Now, for those of you that are new, this is cycle analysis. We're looking at the cycle harmonics that are in here. This is like music, where you see in here the dominant pattern right in here, and then it breaks down into the minors, the minor halves. There are minor thirds, minor quarters sometimes, and there are multiple cycles that are often on the pages. We show you the most dominant cycles, so it's not that confusing. And what I want you to see in here is you could see this uptrend as the momentum is strong and it moves up the slim ribbon. This is way back here to March as you have this positive cycle and positive cycle. You got some whipsaw right in here as you got a pretty big break, and then this double top that's forming here in Facebook. Now this is what's key that we're going to look at, and that is there is a minor cycle right in here. You could see that it went kind of deep, and this dominant cycle right over here that caused this break. It then had another rally where these two up cycles were affecting it. These are rising phases. And then what you could see is right over here there was a breakdown. You could see how it was fairly late in there, and now this breakdown right over here is early, and that leaves all this time for a decline. Here's your breakdown under this key level. It now signals a decline in Facebook, lower prices coming, as we look at the timing in here, which this cycle will tell us, into the 3rd week of August. So we see 1 month of big trouble here in Facebook, and Facebook is one of the stocks that is a market leader, and that is a warning. And I'm going to show you 5 more in here that are giving warnings right now. The next one is we go through the kind of FANG alphabet in here, is Apple. Look at Apple. Now you can see in here we call these positively configured cycles, where each of these cycles that you see in here made a higher high and a higher low and a higher high and a higher low. 4 of them in a row since March. And of course, Apple is, the heaviest weight in the NASDAQ. And now we have a breakdown that you can see right in here. You can see it's almost breaking down in momentum. I didn't point out to you, Facebook did lose the upside momentum. This is almost there right now, and this was the key low right over here. It is a cycle breakdown, and we're looking for lows in here. So what this decline right over here, which is the first negatively configured cycle set up, calls for a low here to come in right around the end of the first week or beginning of the second week in August, and then this one over here takes you to the end of August. We believe that both of these cycles will be in the downtrend, and that Apple has confirmed this double top that it made in here, that the dark cloud cover, this shooting star, all of these things are warnings. And then this breakdown under the key level that you see here, we noted cycle breakdown is negative if it gets under that level. Well, it did it. Now we're pointing to the downside, it looks like, to the end of August. The next one is Amazon, AMZN. Here you have a very similar pattern. These positive cycles going up, this top that forms here, the double top that's forming, just broke down a little bit and bounced back, but pointing to the downside. And we could see 28.15 coming sometime in the next couple weeks, and the lows either coming based on this cycle or this one, either on August 6th or August 25th. So you can see that the end of August is a very key time, and some very key negative things that are going on. So that's a look at Amazon. Google has been a little more resistant to the breakdown, but not by much. And again, you can see the multiple cycles in here, the dominant and the minor, very clearly laid out. The upward momentum clear, and now it is giving way. And here is the key level right here, as it made the lows right on this minor cycle and came down and tested it. It has all of this time to decline. This is another about August 9th or 10th, and then this one goes out way out into September. So Google, in our opinion, has topped with this kind of double top that you see right in here, and now is really at the precipice of a breakdown. Best case that I can see is 1450 in the near term in the stock. But probably, well, this right here is about 1440, then some kind of a rally, and potentially much, much lower down into the 1300s or 1200s in Google before this August time frame. So that is a threat of a breakdown, but not quite there. Microsoft, the next heavyweight we're going to look at in here, and this one also. Now this is just beautiful. Every one of these cycles since March, a positively configured cycle. And this one's a little flatter, but these all positive. You could see the beautiful rhythms. These are shorter patterns than we had in these others. Charts that I'm showing you. However, look at, by the way, you can watch our video in our workshop, cycle analysis workshop, that shows you how cycles form chart patterns. Well, you can see how this 1, 2, and 3 cycles made the head and shoulders top, the breakdown under the key support, and the measurement out over here about 194, 196, right out over that way. That is mid-August or late August to early September before the bottom is projected in there. Microsoft, a breakdown, a top made very clearly, and lots of downside risk in here for the next 4 to 6 weeks, where we see this one right here. And the last one we're going to look at is the crusher of the day, and that is Intel. Again, a head and shoulders top formed, and what's really cool is that it hit the head and shoulders measurement today, right over there. Here is support from the weekly chart down over here around $48. And it could very well go significantly more to the downside. You see this minor cycle bottom that's due right over here. You see this one where it bottomed and then picked up. Well, this is after a breakdown. So you get a potential rally up here, and it's going to create a shorting zone. where the stock is likely to continue to the downside. So that is the crusher Intel, as they have delayed a very important chip that people were waiting for, and the stock headed lower, I think, for quite a number of weeks there. So that is a description of these, or analysis of these very, very strong market leaders. Let's say they were strong, and now potentially have a strong influence to the downside. These stocks have topped. If you think that the stock market can continue moving up when all of these massively over-invested stocks are moving down, where the funds have are so overweight in them because the prices went up so far and because they couldn't stand being without them, are now going to have to liquidate at some point, and you could see these prices fall hard, and that is going to mean trouble for the stock market going forward. The risks now are much higher, and we believe that the correction and this topping process has not only begun, but the correction in the NASDAQ is well underway, and that is going to influence the market to the downside. That, as we believe, is the highest probabilities, and that's what we always want to bring you. Stock market in trouble, market leader breakdowns. So now we're going to look at our short-term view for the coming week. I always want to be accountable to how I did, especially when I do bad, because then I have credibility, and I haven't done bad for a while. This is the second week in a row where our analysis has been in the 85 to 90% correct category for the short term. Dollar was pretty much a bullseye. We were really right in oil on the range. We thought it would get above the 41.50 area, and it did, and then kind of stalled. Gold market, that one was stronger even than we expected, got up to the levels that we thought it would go to, but maybe in a few more weeks. The bond market acted as we expected. The stock market pretty much right on, and I'll show you all of that as we get into it right now. So we're going to switch over. There's still that Intel chart, but we're going to go to the light crude market right here. Here is light crude, and again, we're looking at these daily charts because that's the short term. Light crude still very much stuck in that range, though we're going to tighten the range up right now. We think that the trend is now down for the next week to week and a half, and potentially getting down to this level over here, and we're going to call this range now that 42.50 if it wants to try one more time, but we think more likely to get down to the bottom of the range, about 38.50. The momentum is still positive, but starting to give ground in there. And there's a battle pretty much going on now, the inflationary aspects of what we see in the metals versus OPEC, which has a lot of money needs, and the ramblings about lifting these caps on production. So that's going to really keep it trapped, we think, in that range. The big resistance around 44. Now it's less likely that it's going to get up there now. So range bound we look at, and the highest probability is trading down to about 38.50 when we look at that. The next one we're going to look at is the gold market /GC that you will see right here. So here's the gold market. We have upgraded these a little bit based on the way that it was trading. It got up to 1904.60 here today. We've been in this upward momentum established right here at about 1760. We believed that it would continue to trade up, that our ultimate goal was into the low 19s to just over 2021. And we think that's still the case. Strong momentum. Now we're getting into this period in here where it should get sloppy, and silver got a little sloppier also. So we're going to look for it to maybe take out these prices by a little bit in here. Minor upside gains, and then minor correction over here. Potential buy right around 1860, down to about maybe 1845. That would be in about a week and a half from now. So we're looking for a little more upside potential, and then curling to the downside for a correction, a buying opportunity in here, and then another move up. This could get you to that 2000 area, could stall in the bottom of our intermediate projections in the 1940 to 50 area, and then kind of make barely make a new all-time high. and then kind of stall in that area. But we think that over the longer term, it's still going to be likely in great shape. No, we're looking for a decline in the stock market. If it becomes a liquidation, they're going to liquidate gold also. So that will give you that decline of some minor consequence that we expect there. So for the next couple of weeks, a little bit higher and then a bit of a correction. And some of the evidence is really that all-time highs are coming and momentum is strong in all time frames. Silver, the leader, which has slightly stalled in here, and we're going to call for 1940 to 2010 up into this August-September period in the gold market before it is over with. Take a look at the dollar, which is basically in free fall, and here is your dollar index. And it has moved down. I want to note that one of our subscribers who wrote me an email said, we're looking at this 10-day cycle that's in there, and I haven't put it in because it's really pretty short to do that. But it's so much in play that I really wanted to add that in. So thank you to our members that sent that to us. And that bottom was due way over here, and it's running long by about 5 days or so, and it's being affected by this. So I think this is a long capitulation going on. We're going to look for a bottom in here and an attempted rally up to about 95.5, 95.70, and then down to the downside again. Momentum clearly negative in here. If you follow the slim ribbon, it gave you the negative signal back over here, and it brought you the big decline. It neutralized for a little bit of an upside correction and gave you the next negative signal here, and then brought you the collapse. So slim ribbon will never miss one of these, never. Because of the way it is designed, and it just sets you up to be on the right side of the big directional moves. And if you don't have the slim ribbon and you have Thinkorswim, just go to our site and to the resource page and you can download it. So that is a look at a very, very weak dollar. We'll look for a minor bounce. Some of the evidence is that bounces are sells. All momentum to the downside. The euro, the British pound, the Japanese yen, all of those now significantly stronger than the dollar, and we believe will remain so for the at least the short term, maybe into the intermediate term. Dollar bad. We're looking for a bounce that will not hold. The next thing we'll look at is the ZBs. The ZBs getting a safety bid and an immensely powerful setup in here. We call this a swamped cycle, where you have a correction, but the upward component, the directional component, the momentum is so strong it won't allow the correction. Here you could see where these nested here, it did allow the correction right there, but now it won't. And it's so super strong and it won't even tick down in here. We're likely to get another move up over here. Our target is about 184 on the upside in the bond market. For the longer term. We'll look for tiny dip maybe potentially early in the week, but then up again, and we're looking for strength over the next couple of weeks. This is where we really got it wrong. If we got wrong on anything, is that we were looking for this dip and a buying opportunity, which we did not get. It is just too strong to give us that. There's a potential upside panic in the bond market if we get a downside panic in these big stocks that we're looking at. And we think that the sum of the evidence is that the momentum in all time frames is strong, as you could see right over here. That is likely to push up to that 184 target for the 10-year, probably pushing down to about 40 basis points. And a very, very strong market condition in here. Minor dips only, and then up. That is a look at the bond market. So for when we do this and we look at 5 major markets, the correlations are always important to us. So we mentioned the bond market, now it's likely to go up. We mentioned the dollar, how it's likely to go down. That does set up conditions as gold is a flight to safety. The dollar is not a safety bid, but the yen is a safety bid, and the dollar is going down. That all sets up to risk, in our opinion, for the stock market. So here's the short-term view of the stock market, and we're going to use the S&P 500 SPX. So we'll go to the S&P 500, and you can see in our analysis right over here the consistent cyclical patterns. Now we put in a higher track in here if the stock market could prove the strength that it could get through those resistance levels. So I'll zoom in there in a second, but I want you to see a positive cycle, slightly positive cycle, positive cycle, positive cycle, all of those. And it's still positive right over here, but the NASDAQ is not. And that's where I'm looking at, which is significantly different. I'll show you that NASDAQ in a second just so that you can see. This upward momentum is still intact. But it failed at those key resistance levels that you could see right over here and has begun to move down. And with the NASDAQ turning weaker, this is where I gave this something like a 30% probability and this about a 60% probability and a lower track about a 10% probability. Now this probably falls to 10%. This is more like about 70 to 80% and maybe 10 to 20% on the lower or sharper track that I don't have in here right now. So no matter what, it looks to us like any rallies in here are failures coming up. This you could see is the minor cycle, which is due to bottom in a couple days. So what we're looking for is a little bottom in here, an attempted rally, and then another big wave down. And then after that, this cycle comes into play right over here, which bottoms around the end of August, beginning of September. So there you go with the lineup of lows that we suggested in the NASDAQ stocks, those big leaders that we think are going to fall towards the end of August. And the big decline risk is over here in that next cycle that you don't even see. So no breakdown in here yet. But when I show you the NASDAQ, you're going to see something different. The breakdown level in here would be 3127.66 right over there, which may only be a few days away if this downside continues as it is. It seems we'll have to see good news come out and the market not respond to it. Well, we're getting some of that in earnings. Let's take a look here quickly, and I rarely do this, is bring up the NASDAQ right in here. Because I want you to see the breakdown and see the difference. So the NASDAQ breakdown level was 10,370 right in here. It has broken down already, though it's over it now by a little bit, trying to hold on. Momentum is not yet giving way, but we expect to have that soon. And this breakdown ends 1, 2, 3, 4 positive cycles, a double top formed in here, and now rolling over in a breakdown, just like the rest of the market. We're projecting down over here to about 10,000, though it's pretty reasonable to reproject it down here to about 9,400, and that could be in this cycle out over here. That cycle right there points to a bottom around the very end of August or beginning of September. So you could see all of the alignments as we have synchronicity between those major stocks and the stock market as a whole. So what we're looking for the SPX for this next week is this kind of a further decline for a couple days in this minor cycle, an attempted rally, which will give us a sell, and you can see this minor support right over there is around 31.88. Well, that's pretty likely. This is 31.73, so we're probably going to get down into that area, give you some kind of a bounce, and then the risks really pick up after that. So we think that higher track is very, very unlikely at this point. Some of the evidence shows us momentum still positive. NASDAQ weakening, NASDAQ having broken down already. The breakdown in the key leaders shows a trouble because they're not going to be lifting the market anymore, and I don't think the market can resist that kind of a condition. We're going to call this a topped market. Sell rallies, I think the switch has been flipped, and as I said in the beginning of the show, reality is hitting home as far as valuations go in the stock market. I think trouble is out there ahead. The market's going to have to prove that and give up these momentums and give up these support zones It's like I'm getting emails from people. Well, your indicators are bullish, so why are you bearish? Well, I am, for the very near term because of the highest probabilities based on these core cycle patterns that we look at, and I believe that those are going to lead the indicators, and then the indicators, which tend to be concurrent, will give that up, and we'll see the declines. The market's going to have to prove that. We're just barely getting the breakdowns right now. So I want to get ahead of it and really let you know that I think there is trouble ahead for this stock market. That is the short-term view for the S&P 500 and is our show for today. I hope you found the information valuable. Your success is our success, and we want you to be more successful, so we're offering that special for Level 3 members. If you didn't see it, go back and look at it. Write to Matt at askSlim.com. That's Matt, M-A-T-T, at askSlim.com. He will send you that special link, and you'll have all of that great content. Binge watch those 500 videos. Well, that'll keep you awake for a while. I want you to be so unbelievably careful. It is so crazy out there. And we're always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been